Welcome out to the Trading Justice podcast. This is Mark Justice, joined with my brother Matt from Tactical Trading. Excited to talk with my brother on the podcast. I talk to my brother about 50 hours a week. On the podcast, I get thoughts. I always get insights from him after digesting a week that I find very, very interesting. Just enjoy these conversations very much. And I love what we've been doing at Tactical Trading lately. We got a couple fantastic webinars coming up. In fact, maybe the favorite title and content of a webinar we've ever put up with Portfolio Shield. It is just one of those absolutely must attend in this environment, understand, because, volatility, headlines, tariffs, Powell, all the craziness. You don't want to panic in your investing decisions, right? How do you approach anxiety from a strategic perspective, right? In these type of environments? It's going to be a fantastic webinar. Cash flow synergy, cash flow still plays, understanding how to do those covered calls. Matt, these are a couple great webinars, and there's something else I want to talk about in a second, but tell me about these upcoming webinars. They're fantastic.
Yeah, I think regardless of the environment that happens in the future, and I know we're going to talk about it in the podcast today, geek out on all those probable outcomes out there, right? But regardless of the hypothetical probable outcomes, it's always good to understand cash flow and how to use cash flow in the market to offset risk and lock down risk graphs when you need. And honestly, when you think about the portfolio, I know there's a lot of people out there in 401ks, retirement accounts, IRAs, and when it comes to those long-term retirement accounts, people work very, very hard for the retirement. They stress about it, they think about it, they work for it, and they work extremely hard. And in these environments, sometimes people get a little bit concerned about what's going to happen to that 401k, what's going to happen to their IRA. There's an old joke that was in the 2008 subprime meltdown where the 401k became now the 201k, and that behavioral mentality of people that went through that, and even newer generations who watched their parents go through what happened in the subprime meltdown, they get concerned in these environments, and one of the things that they do is they have this immediate rush to sell, because they don't understand the environment, they're concerned, they're worried about a repeat of '08 or the pandemic. And so they have this immediate sell first, ask questions later. But because they're not traders and they're not in the market constantly, they're really just focused on that long-term retirement account. That ask question later oftentimes doesn't happen until years and years and years. They miss out on a tremendous amount of opportunity. And so we got two webinars coming up that's targeting those individuals in terms of learning how to cash flow in the market, utilizing your assets to bring in cash flow from. And then in Portfolio Shield, we're going to focus on how to protect your retirement account through a variety of different means, obviously utilizing put options, but also getting into other forms of hedging analysis out there as well. It's going to be an awesome couple webinars. The one on cash flow synergy, April 28th, Portfolio Shield, May 1st. You can register for both of those webinars at the live events link in the description below. And hopefully we see you there, because it's going to be a very, very fun and entertaining, and quite frankly, a lot of educational material is going to be in those webinars.
Yeah, this is knowledge is power. Knowledge helps you make great decisions. These are the type of investing, portfolio management webinars that are very important. I also want to give you a shout out. You've been doing great things in our pro community. You started to do a little hangout. We do a traders lounge every day for our pro community, updating, and you've been expanding that in our Discord. Basically, an hour before, to just expand the live content within the market hours to help.
We like hanging out with our pros. There's no doubt about that. And every single day in the market, we're doing the Traders Lounge with our community, breaking down all the market activity, answering their questions, talking about trades and investments and so on and so forth. But we wanted to do something in Discord as well. And so now we're doing the pre-show in Discord for our pros, where we basically hang out for an hour, talking shop, talking trades, breaking down trades. It's really a trading type hangout type situation. It was way fun with the pros this week, and we're looking forward to doing more of them as well. So obviously expanding our products at Tackle Trading for our pros, and our pros know that we're always going to take care of them. So I hope to see more and more pros there. And if you're not a pro, this is a great time to be a pro of Tackle Trading. I can tell you that.
Yeah, we named this podcast Groundhog's Day. What was it? Tariff Groundhog's Day. What was the exact title of the podcast that we named it?
Tariff Groundhog Day.
Tariff Groundhog Day. And you know, in a lot of ways, you know, the tariff conversation, and we're going to talk about it. We're going to talk about JPAL. We're going to talk about gold and Bitcoin. You know, a lot of interesting stocks in the news. We've got a full podcast that we're going to power through in an informative way. I'm going to give my brother some friendly ribbing before we start, though, because my brother is very educated, very smart, one of the best analysts that you will ever find in the market. And I was like, well, I want to talk about this in the podcast. And Matt's like, I don't find that important. And I want to talk about this in the podcast. And it's like, I don't think that's important. And I was like, Matt, do you understand that the fact that you don't find it important is really good analysis? If you think, if somebody is talking about something nonstop out there, everyone in the market talking about whatever the subject is, right? We're talking about this all, you know, in the whole market. And you're like, I don't find that interesting. Well, that is very interesting.
There's
on why you don't find it
interesting. Noise. There's signals and there's noise. And what I felt this week on the tariff conversation, I personally felt there was a lot of noise. I did not find there to be a lot of signals in from a tariff perspective. And so it's not that I don't find it interesting. I certainly find it interesting.
Impactful is probably the most.
It's what's the important conversation this week? What's really driving market price this week? Because I don't see a lot of tariff impact on the pricing this week. What I see is consolidation. What I've seen is earnings analysis. And so it's not that the tariff conversation isn't important. It's obviously important. But I've also said very many times in our pro member community that, and I've used the Russian invasion of Ukraine as kind of an example of to understand this. But in the first month that Russia invaded Ukraine, it certainly wasn't to this degree, the entire market focused singular on this one subject matter, but there was a rush to basically paint the environment as overtly negative, terrible. We're going to see massive increases in this, massive decreases in this. What about this? And what about that? And the billion different variables that go through our head in the immediacy of fear. And what typically transpires, and when I mean typically, I mean like almost 99%
almost all the
time, is those ultimate fears we have in the immediacy don't come to fruition, and the market moves on from the conversation because it gets used to the conversation. And what I saw this week is a little bit of that. Not all the way, but I did see a little bit of that where the week before the market was overreacting and pricing in either Armageddon or the heavens and the earth and the skies aligning. The market was extremely sensitive last week to every single degree of tariff information that came into the market. This week, we had two dojis this week, for crying out loud, Mark. One of them was on a day where everybody in the world was geeking out over tariffs, Powell, the end of the world, and yet we had a couple dojis in the market. The market's trying to figure out the next move here, and that to me is important. The technical conversation to me is important. Having an understanding of the volatility and the uncertainty that tariffs do provide, I think that was last week. I think that's this week. I think it's going to be next week, and I think it's going to be the week after. But the market has seemingly stopped overtly pricing in every single degree of headline that comes into the market, because at the end of the day, if you understand the environment, the tariff environment, if you understand the Trump administration, if you understand the kind of the landscape out there, you know there's going to be signals and you know there's going to be a lot of noise. And I felt like last week was a lot of noise.
Okay, and we'll walk through some of that noise here in a second. I'm going to make fun of my brother 3 or 4 times in this podcast for being dismissive.
And I'm okay with that.
When I think the analysis is really good on why he's being dismissive. Let's do a brief technical update though before we get into some of the meat of tariffs and Powell and gold and stocks. So many interesting things to discuss this week and analyze. You know, from a technical perspective, you know, I love your Russia-Ukraine analogy because that's exactly how that played out. And you saw
about 30 days into it, and then again, it's been a conversation for years, right? But it hasn't been a market conversation for years.
Yeah, and then the market moved on to different topics, and those topics can be positive, they can be negative, right? Like, but it moves on to different topics.
It moved on to inflation very quickly,
very quickly, and then that became the issue, and that became
dominant storyline, and the Russian-Ukraine just became a data point within that macro conversation. Is what happened.
Yeah, and I want to emphasize that's how this almost always plays out. There's some big catalyst, and then it moves on to the raw fundamentals, right? Whether it's inflation or recession or growth or whatever it may be. And then the technical charts in those environments tend to be, whether bearish or bullish, much better behaved. You know, the chaos leads to technical stability, which not necessarily is bullish, right? But it's like more readable, right? What's your take on the technicals as we head into the
Well, I
new week?
honestly thought the technicals behaved fairly decently this week. And what I mean by that is, like I was talking about just a moment ago, last week, we were pricing in a lot of different things and a tremendous amount of volatility. This week, that volatility subsided a little bit. And the thing about technical analysis is volatility is its kryptonite. It's the thing that makes technical analysis difficult is volatility. We love consistency. We don't love volatility. If we can get consistent volatility, we love that, but we don't love the up and down nature of volatility. But as volatility subsides, you can start to see pattern development. And I thought that was the important part this week, is that for the first time in the last couple of weeks, we started identifying the true nature of pattern development. And that's what I wrote about in the newsletter this weekend for our pros, is that degree of pattern development we saw, the probability of where we see that go next. And when you look at kind of the case studies we've been anchoring against to kind of understand the current environment, the current patterns, the current volatility, like I talked about in the newsletter, you kind of got to go back to the 2020 pandemic pricing, and you got to go back to the 2018 fourth quarter pricing. And in both of those scenarios, Mark, you had every time we go through situations in the market, everybody thinks this is the worst or the best of all time. It happens all the time where us people, we're all precious little snowflakes. We think everything is unique to us in that moment. But there's a tremendous amount of commonality between what's happening right now from a pricing and an uncertainty perspective versus what happened in 2020, kind of in the pandemic, and obviously trade war number one in 2018. And so in all three of these examples, you had momentum to the downside, followed by deeper bearish retracements that worked into the 20-period moving average, followed by short-term consolidation, and then you had the signal. And the signal was when it broke back up above the previous pivot in 2018, that previous pivot. If I go back to my newsletter there, in 2015, that pivot was the 20-period moving average, combo 9 EMA. In 2020, that pivot was the 20-period moving average, combo 9 EMA. In 2025, that's exactly what we saw last week. And so, you know, those case studies I've been talking about recently, both in this podcast over the last couple of weeks and definitely at Tackle Trading throughout our Traders Lounge, the Discord Hangout session, the coaches shows, the newsletters, like these are very important to us at Tackle. It's playing out pretty on script right now, quite frankly. And so the question now is, where do we see a proper resolution to this? And there's really 2-3 patterns that you want to focus on. One is bear stop out analysis, which the 2020 pandemic and the breaking of that 20-period moving average was the initial creation of bear stop out analysis and the V-shape reversal recovery and how we navigate V-shape recoveries. And so you see a breakout of 550 on the spiders, you get above a close above the 20-period moving average. That is the signal. That is the signal. All this last week was noise. That is the signal for the bulls to come back in and say, okay, now we're ready to rock and roll. On the flip side, and I do think this is probably the most likely scenario right now, if you had to put a gun to my head and say, hey, Matt, what's the probability? Is it gonna break out or give us a double bottom test? I would say the most likely scenario is a double bottom test.
That's where I'm at too.
But again, you got to be ready for that pandemic pricing though, because The pandemic pricing does leave support behind. So like that creates a momentum condition. The best resolution to this long term would be a double bottom situation. And it would also be the more concerning in the short term, but in the long term, double bottoms have a tendency to create foundational support levels. Those short term reversal analysis brings down moving averages so that when you break out, you create open air environments. But those are the two patterns you really are looking at this week.
No, and I just want to spend a minute here on if price.
Can I just really
go ahead.
finish, because I'm almost done with my technical thoughts. And so to see resolution of that, if you break this 520 level, which is an intraday double bottom this week, you break 520, you should see a pretty quick journey down to the 595, 500 level. Ultimately, 565 to 570 is like a massively important support level. On the flip side, 550 and
460.
465, yes, 465. Thank you for that. On the flip side, resistance at 550 combo, that 20-period moving average, you got to reclaim that before you get excited as a bull.
Yeah, just from a technical standpoint, and not just a technical standpoint, like as someone who would like to add risk, like I would like to add some
close above the
long-term
20-period moving average is the signal.
I don't know if that's for me, to be honest with you, because you'll come into a lot of falling moving averages.
I get it, but
and
2018 and 2020 both didn't care about those moving averages.
Yeah, and both of those had supportive Feds and supportive macro conditions improving, which I don't believe we have.
The one thing you're discounting on the macro in this condition versus last time is alleviation events that alleviate.
And that's the thing. And we'll talk about
than what. See, I know the Fed's coming out of the market and saying, "Oh, you guys handle your own." Well, you could have fiscal alleviation here that would act as a catalyst from a fiscal perspective. That would be like, for example, if all of a sudden you had a trade deal with Vietnam, Japan, you were negotiating now with the EU, those are alleviation events that alleviate the macro condition. Now, there's certainly going to be macro fallout regardless of whatever happens on the tariff side of the equation. What I'm suggesting, though, is those alleviation events, I don't think we should discount those, because those are the dark clouds that are hovering the market. And so regardless of the situation, I'm with you. A double bottom, double top is traditionally going to be far superior.
I think it is like insanely. No, you might not get it, right? And you have to like judge the macro alleviation event, because this market is not going significantly higher without alleviation events, right? It's just not. And
no.
But one of the things that and we'll talk about some of those macro alleviation events here in just a couple minutes. But one of the things that a move lower into that support level would do, I read a lot of, big bank analysis this week, and everyone was the same. It was like nobody caught that bottom, right? Because everybody was
nobody else.
Well, yeah, but everyone was alleviating risk in their, managing portfolios, alleviating risk.
The bottom was created by short sellers buying back their shorts.
And so what I think you would see is, I think you would see some confidence, especially if you start to see a technical bottom put in, even if it's not exactly down to the 490, whatever, if it's a little bit higher. That would, I think, bring in some longer term money. A
double bottom, you would certainly look at that because there's some real structure of support around.
Yeah, I mean, if you come down, someone who's very concerned about the macro, very blah blah blah, which I put myself in, but if I come down to that level and you start to form a technical, bottom, I will start putting, money to work in that scenario, because, well, we've seen through history, and we could spend the next 45 minutes going over the dozens and dozens of times in volatile conditions that double bottoms.
Is this the big one? Yes or no? Like, and big one meaning, is this
the big bear?
The big bear. Like, is this not a pandemic situation? Is this subprime level? Is this .com level?
I don't think it has, unless you go full nuclear with China.
I don't think it's there yet.
It's not there, right?
Well, it's not there yet, and there's concern there, right? Like, I'm not saying, like, we don't talk in politics talks in 100% certainties. That's not what we do.
You can't.
Everything's based on probabilities. By the way, politics should everything be based on probabilities as well. We'd have a better scenario, a better lifestyle if that was the case. But they talk in certainties. We talk in probability analysis. There's a vast difference there. And so when you're looking at the technical condition, I don't think you have a strong opinion between 520 and 545, for example. I think if you get underneath 520, you got to add bear delta as you look to navigate down to support.
If you break the support, you're adding hedges. You just 100%.
Are. If you're not already hedged, you are. And secondarily, if you break back up above and you close above the 20-period moving average, I think you have to add bull delta there. Now, does that mean bull delta from a long-term perspective? Maybe not.
Oh,
maybe,
no, yeah. And that's
short-term trading perspective. Whereas if you get a double bottom, I think you are thinking a little bit more longer term there.
Yeah, and I think that's a very important distinction. Breaks above from a trading point of view are going to provide
breaks above is a very good trading conversation.
Yeah, it's a very good trading conversation. The double bottom is a fantastic investing conversation, right? And as that develops,
back above on pandemic, I'm staying in pandemic playbook. I'm staying day trade, very aggressive swing trades. You get down and you start double bottoming, double top, you have a different conversation there.
All right. So on the tariff front, talking about alleviation events, if we get alleviation events, those are going to be on the tariff front, right? That's where we're going to get alleviation events. And, as Matt said, there's not a lot that changed this week. And give you some of the highlights.
Conversations, though, right?
Yeah. Let me give you a couple positives. And so what I want to do is I want to spend about 5 minutes on tariffs. I want to just talk about a couple of the positives that happened this week, a couple of the negatives. And then I have a JP Morgan. This is what we need to see from an alleviation event catalyst to stabilize the market. Get your take on those. On the positive, let's start on the positive front. I thought there were very constructive talks with Japan. Trump talked about those. We're almost certainly going to see a deal with Japan. Japan and the United States are long-term allies. Japan is very committed.
We protect Japan. I would assume we're getting a deal. Yes.
We're going to get a deal. Japan owns 30% of our debt. We need to deal with Japan. We need to deal with Japan as much as Japan needs to deal with us.
Japan, you're most likely getting one with Vietnam and
that is going to, South Korea, Vietnam. We can see the
India
Asian
will be there.
We can see the Asian corridor, right?
Those are important, though, because China's targeting those countries, and they're trying to turn this into a Northern Hemisphere versus Southern Hemisphere thing, and they're trying to. So those are important trade deals.
Yeah, and so a deal with Japan is almost certainly coming. Now, these negotiations, is it coming this week?
A final trade deal might not get here for a year and a half.
Yes, and so, but
it took 2 years to renegotiate the NAFTA deal.
This is why markets in a lot of ways will move beyond this, other than maybe the China.
We don't need a final trade deal. We need to understand that they're working towards a final trade deal. That's if you're saying you need to wait till the ink is dry on that piece of paper, you're not going to be doing much.
The market's technicals will have formed up one way or another and have moved on to recession, growth, inflation, non-inflation.
Once
whatever.
you start seeing a trend develop there where they're getting deals done, there's going to be a general market philosophy that this trade war is over, other than China. And even on that side of the equation, Trump's talking China a little bit differently this week.
Yeah, and then another positive thing, I watched the presser between Prime Minister Meloni from Italy and Trump. Thought that was a lot of good vibes there, right?
He loves Trump. She's one of the European leaders that does want to see a trade deal. She was also one of the European leaders that did not want to retaliate against the initial reaction.
Meloni is fantastic on multiple levels. She's a first-class leader. I have nothing but positive things to say, but very good vibes there. The EU delegation and United States met, not a lot of progress there, but there's talk there.
Like they're going to continue to talk, though. And
yes.
Isn't that a win?
And that is the important thing to move out of this phase, right? This phase. Another positive thing, China for the first time, and then we'll get into some of the negatives this week to let you know that we're not out of the woods on this from a headline perspective yet. China signaled very clearly, like they did in 2019, that they want to talk. They put out a statement basically that was very direct, that said, listen, we want to be treated with respect. Let's stop this negative, insulting type language. We are willing to talk. They also changed their trade ambassador, which was a move that they also did in 2019. Eventually, markets moved beyond tariffs entirely. And these were some of the things that China did before that happened. Trump also, in that same press conference with Meloni, was also saying, listen, we're going to get a deal with China, right? It was very,
Did that about the EU as well.
Yeah, and so, I thought Trump, in fact, in my own Vikings Discord, I put out a little thing. It was like, Trump has good vibes today, right? Like I
thought he was better this week than he was last.
And so, and that, and
the last week, I mean, that was one of the worst rollouts we've seen of a major economic policy update. And I think Trump's lieutenants, they have some egg on their face on that one. I've been very open about Peter Navarro and Lutnick and I think it's a positive thing that those two individuals are taking a back seat and Besson is taking a little bit more of a leadership position with Trump on this tariff conversation. I think we saw that play out a little bit last week, and I think that's one of the reasons why the market started to slow down.
So deal with Japan coming, positive dialogue in a lot of places, China offering the olive branch. Now, on the negative side, there was a Wall Street Journal report that on April 6th, one more positive is, let's not forget those exemptions, which the administration tried to walk back, but are still there. That was a massive, exemption list on tech to start the week, right? So there were some positive things, right? There were some positive things. On the negative side, for me, it deals with also with China. We're going to talk about the NVIDIA news in a little bit. In stocks in the news, but there was some, the attempt to ban chips going to China. China escalated, stopping Boeing purchases and a couple other little things. But then there was a Wall Street Journal.
Some tit for tat stuff going on.
Some tit for tat stuff that you see in this, right? That may mean nothing, may mean something. We don't know. That's why it's Groundhog Day, right? Especially on the China front. But then there was a Wall Street Journal report out by that said Scott Bessent on April 6th was basically pushing let's isolate through the trade negotiations. Let's have an isolate China plan where
that should have been the plan the entire time.
Where it's like, all right, so we're going to isolate China. We're going to make deals with everyone else, and we're going to put pressure on China, right? Because we're not in a trade war with China. We're in a economic, technological AI war with China, right?
We're in a cold war with China.
We're in a cold war with China. The trade is just one.
It's one aspect of it.
One aspect of it. And so we saw some of that. What was it like just, and for you, Matt, when you see all this, you're like, well, we don't know anything that we didn't know at the start of the week. But there were some positive vibes. There are also some concerning things with China.
I like the fact that both Trump and China are they haven't started talking yet, but they're doing the little pre-show talk, right? That was missing last week. I thought that was a positive.
I like how you phrased that. That was missing. That was present this week.
That's more present this week. And the further we go on to this saga, I think both China and the U.S. understand that there is, to a certain extent, a mutually assured destruction pact economically between China and the U.S.
Yeah, and I hate when people do China's going to get it worse. Nobody wins.
Nobody wins
like a full-out Armageddon war.
Nobody wins.
Right.
Like, no, nobody wins. Like, yes, of course we are shielded more than anybody around the world. Yes, there are benefits that we have in the United States that others do not enjoy. We would fare much better than China in a trade war. We would fare much better than any country that has ever existed in a trade war. We would fare much better than any country that has ever existed if we did a radical nuclear war as well. But that's not what we want to see happen, right? So yeah, we might win the nuclear war, but there might be a little bit of mutually assured destruction in that. So yeah, you're better, but you're better than what? A pile of dung? Like, we got to do it a little bit better there. And so I like the fact that the leaders are talking, or not talking yet, but there's less animosity in the language right now. I think that's a positive thing. And don't get me wrong, this tariff conversation, this trade conversation, it's going to be a long-term conversation, but that doesn't mean the market's going to see it as a problem long-term.
And that's your big takeaway right now, right? Is like, listen, we're not done with the headlines, right? We could have a major headline.
We're not going to be done with headlines for years. But people need to understand that. Like, put on your safety belt a little bit, buckle up a little bit. We're going to have this tariff conversation for a while. Mark, it takes an army of lawyers for a long time to work out all the kinks and everything that goes into those trade deals, because it's not just about, okay, how much are we going to tariff and how much are you going to tariff? Like that, there's a lot of other things that happen in these trade deals. And so, yeah, it's not a matter of finding an end conclusion to this. That end conclusion is going to be when they sign the trade deal. But by the time they sign the trade deal, market's going to price that in well in advance. And so to me, it's the understanding. And I guess this week is for me, it's like, all right, the market is starting to understand that this is a long-term conversation. Doesn't mean we have to price in long-term situations on intraday timeframes. Market is handling the conversation a lot better. And as the market is handling the conversation a lot better, the market moves on to other things. And those other things very quickly are going to be earnings and technicals.
Yeah, and that's why also, like, you know, there's enough positive vibes, and you know, and if we do break support, add a little bear delta, come down, but I'll be looking for a support build.
Well,
It's hard.
and again, just because the market gets used to a conversation doesn't mean the market is automatically going to go up. Like that's
no.
They're two
patterns,
different conversations.
It's what you said about 10, 15 minutes ago. It's about the consistency of patterns then, right? You break support. Oh, you go down to the next support.
Honestly,
support
I thought that was the most important thing that happened this week was the early beginnings of pattern development. Like we have not had patterns in the last week and a half, and we're starting to see that. The daily chart's been broken.
Because if a pattern breaks and it's bearish, fine, add protection. If it breaks to the upside, add bullish delta. Like, and that's the transition. And I think that's the big message on this. Now, for me to get excited on the way up, I need an alleviation event. JP Morgan, I just do this real quick, Matt. I'm going to list out 4 things JP Morgan needs to see for the market to stabilize.
And you want me to
just give your take.
Probability.
Well, just to get your take. You know, these are all things that you have.
I will rank them from the most likely to the least likely.
Yeah, and also just if the impactfulness, right? Number 1, series of trade deals, right? The key being that you know, across the G8, Japan, Europe, you know, G8 countries, right? With China deal being the most impactful.
What? We back to the G8?
That's the language they use from their notes, right?
Okay.
So a series of trade deals, right? You know, with major partners, right? Mm-hmm. A Trump pivot on China, basically reducing tariffs to open up negotiations, right? Something signaling that would be the second one. A court injunction where the courts come in and basically, you know, say that tariffs have to stop for whatever reason. And then 4, Congress passes a veto-proof law limiting Trump's.
Wait a second, hold on. You were cutting out there a little bit. So one was what?
Series of trade deals. Okay. A series of trade deals, not just a. Number 2, a pivot on China, where they reduce the tariffs, saying we're going to talk and see where this takes us. Number 3, a legal injunction from that. Number 4,
injunction from who?
From a court on one of the numerous, like Newsom filed a lawsuit, the Coachback legal group filed a lawsuit challenging it. There's a number of court injunctions. So basically a court decides, and then number 4, Congress passes a veto-proof limitation of authority on tariffs from Trump. Those were the 4 things. What's the likelihood that any of those happen?
Veto-proof. They just need to remove the emergency declaration. I don't know.
And this is something you talked about a couple weeks ago.
Yeah, it's good to have JP Morgan listen to the Trading Justice podcast. What I would say the legal injunction is a non-starter. Good luck, Newsom, on that one. I understood what his point was, but what's the court going to say to Trump on tariffs?
When he actually currently has legal authority. So what's the court going to...
Congress gave the president legal authority to declare an emergency declaration on the debt regarding the economy. I don't know what a court can do to challenge that. I don't know what a state can do to challenge that. Now, can Governor Newsom out of California maybe do something differently? I'm not sure. Like that's up to the state of California. But from a federal perspective, Congress gave the president this authority. Tariffs are with Congress. Congress outsourced that by allowing the president to declare an emergency declaration. To stop that, you need to take that power away through a vote of Congress. And so the injunction one doesn't like that. That to me is a political story. That to me is Governor Newsom wants to run for president and he wants these battle scars. It is basically what that is. And there's a lot of, on the Democratic side, there's a lot of people that just want to fight just to show fight. And that's kind of how I see that injunction. I don't see it as an actual thing that's going to actually impact Trump's decisions, what we as a country do from a tariff perspective, or what other nations do. I highly doubt that China is going to be like, yeah, let's go listen to Governor Newsom and not try to negotiate directly with the president. And so I see that as a non-story. I see that as a political thing. And I don't even understand why JP Morgan would even put that into a probability analysis, quite frankly. It's lazy analysis. And quite frankly, they probably got it from ChatGPT. It's just lazy. It's just absolutely lazy. Secondarily, the trade deals, Trump pivots, and then congressional act. I honestly, I mean, the most probable of all of those is the trade deals. That's the easiest path.
The easiest, but the longest, right?
Trump's not pivoting unless the bond market just absolutely gets crushed. And then he could pivot. So that has to be discussed. I mean, we did see Trump come off his aggressive stance just last week when the market was going down, 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 down. And that's what created that big candle last week. So that certainly could be in the cards. A veto-proof, an act of Congress. I talked about that a couple weeks ago. I called it a low probability then. I still think it's a low probability now, especially after we saw a little bit of talks happening. I highly doubt Republicans are going to find the conviction necessary to do that when they're signaling talks.
When the vibes are good, they're not doing that.
If there was not some degree of positivity in terms of the communication, and Trump was just dead set on doing broad-based tariffs regardless of the economic fallout, I would say at some point Congress would absolutely act. And at some point, I would say it would be a 100% probability, or those members of Congress that are in sensitive districts going into midterms are going to get kicked out of Congress. I mean, that's just going to happen. And so I don't see it being a high probability right now. I didn't really even see it being a high probability 2 weeks ago. I just wanted to talk about it as one of the potential outcomes in the immediacy. The most likely scenario is number one, Trump signs deals. And that's basically where the conversation is navigating to. We'll have to see how that navigates over the next couple weeks. But I think this is going to be an ongoing conversation for a while. So I think that's the most likely scenario, and I think it's a high probability.
Yeah, no. And so, yeah, so I like your general take here. I do, of markets moving on, technical patterns telling you the story. I think that's, the appropriate way, right? Pay attention to the head.
And I don't want to come across as, hey, there's nothing to see here. That's not my mindset. That's not how I've been handling this conversation in our community.
It's the charts will tell you.
But we are certainly seeing slowing momentum on this conversation. We're seeing volatility come down. We're still in a sensitive environment, and that sensitive environment is still going to be volatile. But if we get a double bottom mark, I'm willing to bet it's going to be on an earnings miss and not a tariff conversation. That's what I think. Although the earnings miss will probably cite tariffs as the miss.
Well, of course they will. We'll get into a few of those. All right.
That's going to happen, guys. A lot of excuses, pre-made excuses this quarter.
Only have a couple minutes to discuss Jay Powell, but probably don't need more than a couple minutes. Jay Powell made a lot of headlines in the market world this week, where he came out, had a speech, and was basically like, we're not budging, we're not cutting rates. We see Jay Powell has completely walked back I don't see the stag or the inflation. He talked about stagflation risk. Mm-hmm. And his basic message was on tariffs that, listen, there are inflation risks, there are growth risks. We do not know how this will play out, and we are positioned right now to wait and see, right? If we see one take precedent, then we'll act accordingly. But it was very much we're not doing anything. We're not delivering cuts anytime soon. We're not deviating from our current plan, which is to deliver the market a couple cuts this year, right? That's the plan, right? That was the general message. Very kind of like what he said a lot lately, Matt. And yet it made a lot of headlines, made a lot of headlines
this week.
Yeah, it made a lot of headlines, I think, because of the
we all know why he made
the gravitas, because a reporter asked Jay Powell, if stocks basically go down, are you going to be there to save them?
It made headlines because Trump sent out a tweet.
Well, and Jay Powell said,
somebody asked him a question.
No, with an exclamation, and then Trump got involved and was like, I hate Jay Powell, which, well, he's never liked the man. Like ever
hired him,
so nothing new as far as like information coming out of the Fed this week. I did think it was very, very interesting that Jay Powell, who's very measured, went out of his way to say, no, we're not helping the stocks if they go down.
Well, how many times do you have to get asked before people don't accept the answer? And
that's a fair point.
Right? Like, how many times has Jay Powell been asked in the last 2 months, or maybe just last month, but I would say it's 2 months, that if he's going to save the market? And how many times?
The Fed put and reporters asking
at least 100?
A lot.
Okay. So at what point do you just say, guys, asked and answered?
And that's what he did.
Like as a lawyer, that's what I would say, asked and answered. Like, you've asked it, I've answered it. What else do you want? The environment hasn't changed. We have a dual mandate. We're concerned on inflation and we're concerned on growth. Because we're concerned on both, our mandate says we can't do anything until we have a better edge one way or the other. That's like trying to ask a trader to make a trade on a doji. Like, no, give me an upper moving price or give me a confirmation on the downside. You have to see that, because the risk of a policy error here is real.
Yeah.
And the risk of a policy error here having a macro impact that other people do not want to see. I have to sort of criticizing Powell.
I like your analogy there of the trading pattern. Powell basically said, listen, this pattern is a consolidation pattern. We need to see which side it breaks to before we act. That's basically what Jay Powell said.
He basically says, we got a K-trade situation on monetary policy, guys. We know we need to act, and we will act fast, but we're not going to act until we have an edge. And that's basically what Powell is saying.
Yeah, and that's
question. I know there's a lot of conversation on Trump having the ability to fire Powell. Yes or no? Does Trump fire Powell before Powell's term ends next year?
Well, the smart money is no, right?
I don't even think Trump is. I don't think Trump actually has a desire to fire Powell.
He's using the bully pulpit.
I know he said it. But Trump also loves to put public pressure on people to get.
Yes, he does. We all know that about Trump.
And why create the chaos in the market on top of
because it would create chaos if Powell was fired.
Powell's gone in a year, and the guy you're thinking about bringing in is similar to Powell.
So the one thing I know for 100%, Powell's not getting another term. All right. Quick little thing. I saw you answer a Twitter poll on out of the last 4 Fed chairs.
I did rank Powell 1.
And they said, who is your favorite of the last 4? And you ranked Powell number 1. And then you said, this feels dirty, and it's like choosing between a lot of bad choices.
But don't get me wrong. I ranked Powell 1, but that does not mean I like.
It's like asking a kid.
That doesn't mean I have a
what's your favorite vegetable? Spinach or broccoli
exactly. Now, mind you, I ranked Powell 1 because I think Powell has had the hardest job by far of the last 4. And the last 4 are Greenspan, Bernanke, Yellen, and Powell. Greenspan, historically, I think is going to be looked upon pretty bad historically for some of the things that he doctored into America, quite frankly. The bastardization of trickle-down economics and basically putting the neo-capitalistic philosophy on steroids, and it did a lot of damage to the middle class, He wasn't my last, though. Bernanke's my last, because Bernanke was the one who fostered in the ability for America to embrace modern monetary theory. A lot of the debt burden in America and the philosophies around money in America today are a result of what Ben Bernanke did in '08. I think he set the wrong standard, the wrong precedent in the wrong time. And I think he's going to own it on his tombstone. Yellen underneath, because I just didn't think Yellen had as difficult as job as, say, a Powell did. And Yellen also is right there, Bernanke light type thing from a stimulus perspective. She's never met a stimulus she didn't love. So,
yeah, I voted Yellen because I always
for Powell.
I always made the most money under Yellen. Like
I criticize Powell a lot. I do. I do. And I don't think he deserves another term either. So I don't disagree with the president on that. He made a historical mistake in transitory. But let's not act like that call in transitory was an easy call, Mark.
Yeah.
We're talking about a unique experience coming out of the pandemic when the entire economy was shut down, supply was shut down, and he was right to anchor on the supply side, saying the supply chain, as it gets back, inflation comes down. His mistake was not understanding the human behavioral aspect coming out of the pandemic of how countries were going to go more isolationist. He missed that. We didn't. We had that conversation, but he did. And so I do think he has to own that one, but I also think he had a very difficult.
I really do. It's just all choosing crappy vegetables that kids don't want to eat on all of them. All right, let's go. Let's briefly fire through gold and Bitcoin. Bitcoin has an interesting setup if it would break. Gold a little overextended, probably on its way to like $8,000. It's just the path in which it goes there.
It might be parabolic path. I don't care. Yeah, gold's fantastic. All you do is get 2-day consolidation before continuation. I love gold, but I've been saying this all year long. GDX and the miners are playing catch up, and I would still look at the miners playing catch up over gold right now. But I love them both, and quite frankly, diversification, you can fit them both in. On the Bitcoin side of the equation, I actually find Bitcoin analysis fascinating right now.
Yeah, this is an interesting. This is one of the more interesting.
This is what I would love the market to do, quite frankly.
Yeah, no, this is
bottom, work back up to a double top, and this is a good case study to understand that double bottom, double top. Because Mark, when it was trying to do the V shape here, look how far distance that 50-period moving average is away. And the 50-period moving average is a trend moving average. It's a trend setter. When you're underneath it, you're in some degree of short-term bear. When you're above it, you're in some degree of short-term bull. You can kind of look at the 20-period similar that way as well. But look what happens because you get a little bit more time due to the double bottom. You get another 3-4 weeks in consolidation, basically. What happens to that 50-period moving average? It is now underneath the overall pivot in the reversal at, quite frankly, 50 again. And so, it's certainly developing, and it's even developing in a front run type situation. But anything above 50 on IBIT, which on Bitcoin would coincide with the breakout above their resistance level as well. And I think that's right around 88,000 on Bitcoin, but 88, 89, something like that.
89-ish.
Looks pretty good though on IBIT with a confirmed breakout of 50, in my opinion.
I mean, yeah, these kind of patterns that are slow developing, and this is kind of like, if you're not a master of technical analysis, come be a pro member. We have a fantastic boot camp.
Slow developing patterns are the patterns that stick.
Slow developing are just fantastic patterns.
The highest probability.
Right. And that's when, traders like the Jesse Livermores of the world are like, yeah, let's do this. Right. Let's do this.
You got to be ready on a breakout here.
You do. All right. Kind of fire through a few stocks in the news and then caller a podcast. And I always enjoy this hour, man. I always enjoy this time with you. Let's start with NVIDIA. NVIDIA caused some volatility on Wednesday, when Tuesday after hours had a negative lead in on Wednesday, when it was announced their H20 chip will require a license to export. And a reminder of what the H20 chip is. It's a scaled down chip that was designed to comply with U.S. export regulations. We have long been restricting some of our most powerful chips to China. So that has already been in the work for years and years and years, right?
Yeah.
But the H20 was the chip that was designed to get around some of those high-end chips.
It was also the chip that DeepSeek used to create the learning model that was basically 5% of the cost of a US based model as well. So let's not be too surprised.
So it's not like the H20 is just some, garbage chip. It's just
it's
not the
garbage chip.
It's not the higher.
It's
but
a second gen chip, but it is a very powerful chip.
And I think this one caught the attention because it was not, I don't know if it was a coincidence that China later on that night, right? Market was down, futures down, H20 chip ban, that China put out their memo saying, hey, listen, we're really interested in talking. We're really interested in talking, right?
Listen, they need Taiwan Semiconductor chips. They need US chips. That they do not produce their chips the same way we do, and we are winning the race because of our chip manufacturing. And I do believe we'll win the AI arms race because of our manufacturing. And I absolutely, I have disagreements with the administration on the general kind of application of tariffs. But I do believe in targeted tariffs, and I do believe in the tariffs specifically on the technology side of the equation.
No, you're an absolute China hawk when it comes to technology, and
we're in a Cold War with China, and specifically, I've long held the belief that we have to win the AI arms race. So, to me, it's certainly negative to NVIDIA in the short term. NVIDIA sells a lot of chips.
Yeah, I mean, this is a bottom line issue with NVIDIA, right?
It represents about 15% profit margin.
This is a bottom line issue for NVIDIA.
But Mark, I don't see it as a long-term negative for NVIDIA. I see it as a short-term negative for NVIDIA. But if the U.S. wins the AI arms race, there's going to be a lot of revenue for NVIDIA downstream. So I'm not too worried about that. In the short term, I am, but I don't. Honestly, I don't disagree with the Trump administration coming out and suggesting that there needs to be a license to sell these chips to China. I would disagree with, I think, in terms of having to get one from the administration. I think that's maybe going a little too far. But at the end of the day, I don't disagree with targeted tariffs on China.
Yeah, no, and this is something that Biden had done, Trump's continuing. This is a specific area of the limitation of technology going to China.
And again, the H20 chip was allowed because it didn't have the ability to compete with U.S. manufacturers, hyperscalers. The U.S. hyperscalers had access to the Blackwell chip and the Blackwell GPU system. And so there was not a competition there. And so the H20 chip was certainly allowed. But after DeepSeek had the ability, Mark, to create that learning model that basically was rivaling ChatGPT, I think at that point, you put a stop on it, honestly, because you cannot lose the AI arms race. You cannot do that. It is chiefly important.
Thursday morning, the market is going to be up 1.5%. Tech's going to be up 1.5%, 2% after. If it wasn't for tariffs, if it wasn't for trade wars, if it wasn't for the tension, if it wasn't for the uncertainty, Taiwan Semiconductor's earnings report was the type of earnings report on Thursday morning that would have excited a lot of people.
It would have, but unfortunately, there's obviously all those other conversations happening. But remember this report,
and I used the word bookmark. I said bookmark this report.
Remember this report
because this is one of those that did not get. This is a classic example on the Trading Justice podcast of us talking about something that we always do before everyone else. Nobody wanted to talk about this report on Thursday morning.
No, because it doesn't get clicks.
Because it doesn't get clicks. Because nobody cares about it.
Data this week, in my opinion, by the way.
Like, this was a fantastic report that lets you know that the demand for AI products is alive and well.
Listen, three things. One, raw numbers beat. Okay. Two, guidance up. Okay, that's big time, because it was just recently where Microsoft said they're pulling back on CapEx spend, and that was assumed it was going to go downstream to Taiwan Semiconductor and NVIDIA, that they were going to see a reduction in revenue because of Microsoft signaling to others, we're going to reduce CapEx spending.
I don't think you can understate how important this earnings report was to the technology space.
because what Taiwan Semiconductor said was the exact opposite
Yes.
of what
it was a narrative busting report
that Microsoft had brought to the table. And quite frankly, we might just be seeing what Microsoft did as a Microsoft problem due to slowing growth out of Azure and not a space. And that's probably the mistake a lot of us made, was when Microsoft said that about the hype about coming out of CapEx, that we assumed, meaning me, I certainly assumed that this could be, downstream impact. What does Meta do? What does Apple do? What does all these other big time Google, what do they do? Well, that's not what Taiwan Semiconductor, who is the one that supplies all these chips to those companies, right? And they said, nope, we're seeing the opposite impact. We're seeing AI revenue build. We're seeing it actually accelerate, not decelerate. And so you actually had a situation, Mark, where you gapped up on Thursday, got caught up in the selling pressure and came right back down. But if it was not for all of that other stuff we were talking about this week, I'm telling you, I know this company very well. It's been on the Tackle 25 for years and years and years and years. There's a reason it's been on the Tackle 25 for years and years and years. This company would be up 10%. And we would be talking about this being a catalyst for the next AI trend. That is exactly what would have transpired. And I'm not sure that's exactly how it's not going to transpire.
Yeah, no, listen, that is,
we might have to work out some macros this week. But Mark, eventually, whether we get a double bottom at 140 and break back up to 160, Taiwan's going to be a conversation, and so is the AI space. The AI space has not been a conversation for months, probably about 8 months, Mark, probably about 8 months. A lot of neutrality and then downtrends over the last few months. Well, I don't think that's going to end.
Yeah, and on technology, I absolutely have
closer the next few weeks.
An investing, not a trading mindset. I think it's very important to pay attention to technicals. If a support level breaks this week, that's not the moment to add risk. That's the moment to hedge risk, right? That's why we spend so much time on technicals. But if we come down to that double bottom, start to form, that's where I will start adding some investment capital in technology specific.
Well, that's the technical conversation, right? Double bottom, double top, breakout, I just think.
And if we have a growth-based recession, big bear market, the form, right? We'll manage it, hedge it along the way, sell covered calls, and look for more opportunities.
Okay, but if that was in the cards, Taiwan wouldn't have increased guidance. Like, I get it.
This was a fantastic
macro concern. I get it. But Taiwan didn't lower guidance.
It was a fantastic report.
He said the opposite of that. We're seeing acceleration from growth. And so, and don't get me wrong, I respect the slowing growth argument from an economic perspective. I'm not coming out and saying that there isn't viability of the recessionary conversation. I just think we're getting in front of it. I just think we're getting in front of it a little bit right now. That's all.
Yeah, no, a fantastic report. Like, seriously, it was a good report. Netflix, markets were closed on Friday. Netflix reported after the bell.
Netflix is going to be up on Monday.
On Thursday, once again, a company, and Netflix has done some things recently, right? They talked about their $1 trillion. We've talked about that previously. Their $1 trillion market cap goal that they want to do. They talked about their future. They had messaging recently that was absolutely fantastic from a, listen, we're on a growth. Y'all can talk about whatever macro things you want to do, right? We're running our business.
Record subscriber growth.
If you have a recession, guess what? Our products, and I love this from a messaging standpoint, our product's awesome. People come back, then we're not going to come back. We're going to grow. Our company is fantastically positioned no matter what happens on the macro. And that messaging, the earnings results, I think Netflix is doing a lot of things right from a management's perspective.
I think so as well. And I think they had a really fantastic earnings quarter, just a weird reporting day, Netflix. Why are we reporting on Thursday?
They forgot it was the market was closed. I guarantee that happened. They're like, okay, we're going to do it Thursday after the bell. They didn't even think about it. And then when they realized.
But they had a fantastic report. Record subscriber growth, beats on EPS, beats on revenue, reaffirming forward-looking guidance. Like, it was fine. Like, it was a good report on Netflix.
Yeah, I know. Good thing. On the other side, one of the stories that kind of sucked the oxygen out of the individual stock room on Thursday was UnitedHealth, who, and if you're not familiar with UnitedHealth, it is a Dow component, a Dow 30. And so when it does something like this, you're going to see the Dow just underperform dramatically when you have one of the few components just.
I don't know how much of the Dow's drop on Friday, and the Dow dropped more than any other index on Friday, but I'm not sure how much.
You're on Thursday.
But it was a Thursday, excuse me. Me and Netflix keep thinking Friday was market day.
Yeah, you do.
But it represented quite a large percentage in the drop of the Dow Jones itself. And whereas Taiwan Semiconductor had a fantastic earnings report, I felt they had one of the best on the week, if not the best of the week. Netflix had a really good report last week. How good they were, UnitedHealth was worse. Like it was just an absolutely horrific report, misses everywhere. And then they significantly dropped guidance. They told their investors, basically, we hate our investor class, is basically what they said. And the investors dumped them as a result.
Yeah, it was a really, really bad look.
It's one of those things you try to pick up falling knife here. Like this was a terrible report.
And one of the things, and going through earnings season, and this is why earnings season is important on so many levels, just because it gives you context. American Express, the fifth stock that I want to talk about. American Express, very important company for me, just in doing my own analysis of big picture, because they paint pictures of consumers, right? A certain class of the consumer, but record card member spend is something is basically what I'm going to remember. Not a great, that looks like the market, doesn't it? Like, is that the S&P 500 right there?
Yes, but I thank you for bringing that up, because when you're looking at earnings, and we've had about 12% reporting in the season so far, a couple things have emerged. The market is not pricing in what they typically do on earnings. We are seeing less impact on the upside. We're seeing less impact on the downside. And so it's
very COVID-like pricing.
You are not seeing radical price movements over earnings right now, because they're all kind of taking the market's cue right now. And so as we get a little bit deeper into earnings, and I do think this week we get a little bit deeper into earnings, this is a heavy week coming at us in earnings. As we get a little bit deeper in earnings, you're going to start to see that impact a little bit more. So far, it's kind of been tariff macro's been really kind of the conversation. Think Taiwan. We just had the conversation. Taiwan should have been up, slightly down on the day. What was the market? Slightly down on the day. The market's still, these companies are still taking the cues from the market. I do think we start to see separation this week, though. AXP had an okay quarter.
Yeah. So, but one of those, like, always checking the credit card people just to make sure that there's no red flags. I generally, and I'm not an expert in earnings, I leave that to you, but just from, walked away being like, this has been really good vibes, other than the commentary of, we have no idea what's going to happen in the future. But that's
very clear. Guidance has been horrific.
That's the future.
This has been the absolute worst guidance I have seen out of companies in years. But we also sold off 20% in front of earnings. And so that a lot is baked into this conversation. And I think that's what we're seeing a little bit, is even on companies that drop guidance, we're not seeing the companies get punished. And typically speaking, when you drop guidance, you typically underperform the market quite a bit. We're not seeing that here. Does that start to impact? Maybe, maybe not. But we have not seen it that much. In fact, the only guidance report that I felt has been priced in a typical fashion was the UnitedHealth guidance, because that was so bad, right? That was so outlandishly bad. But earnings season in general, about 12% in, we're seeing the overall numbers come down a little bit. We're in the mid to upper 70s on EPS beat. Revenues came down to a little bit more understandable number in the low 60s. The veracity of the beats is coming down a little bit. From a raw numbers perspective, I would say this earnings season gets a D+, honestly. It has not been a good quarter. I did not love the numbers. I don't love the veracity of the beats. I think it's going to get worse. But from a pricing perspective, it's a B+, because again, a lot of the negativity that you would have seen come out due to earnings, I think, was positioned fairly well coming into earnings, because two things happened coming into earnings season that changed Number one was the price came down. We had basically a month and a half of sell off. We had price come down 10, 15, 20%. So you have a low bar on price, but you also had earnings forecast downgrade more than the average the month before earnings season as well. And so you have a very low bar, and that very low bar, we are barely inching over right now. Does that make sense?
Yeah, so raw numbers good, but I like what you said about the price response has been a B plus, right? And that's the good vibes that, like, as far as, like, because we're seeing some bad reports get bought, and
it tells you that the market it tells you that the market doesn't see the guidance as a negative against the current pricing.
There is nothing that makes me less crabby than when I see a bad report get bought. Nothing. There is not a single thing. Like when I see bad reports get bought, we saw that with Constellation Brands recently.
A bad report that gets bought is even worse than a good report that gets sold.
Yeah, like it's just like, a bad report that gets bought tends to put in bottoms. Like,
a bad report that gets bought tells you something about the behavioral analysis of the market.
It's, and we're seeing that, and I'm very curious. That's a big, huge, like, yeah, tariff headlines in the coming week or two. Sure, I want to know them. I want to see how that escalates. Price behavior on earnings. Do we continue to see some of these trends? Right, like, very, very, very curious of that. And of course, I have you to lean on for that.
We got over 100 S&P 500 companies to break down this week. Gonna be fun. Gonna do them all.
And Matt is going to give you the highlights on those every day in the Tackle Today. Be sure to check 100%. That out, Matt. I've enjoyed the podcast as I always do. Wrap us out. Send us out.
Yeah, thank you so much, Chucky, for another wonderful podcast. Really enjoyed the conversation. We hope everybody else enjoyed the conversation as well. If you do, please give us a like and share. That's one of the best ways to help us out at Trading Justice, is to help us get the visibility out there, the message and the podcast out there to more listeners and eyes and all of that jazz. So like and share. Love you guys. Thank you so much. Tackle Trading has a couple events coming up very soon, one on April 28th and one on May 1st. Cash Flow Synergy on April 28th, 8:30 p.m. Eastern Standard Time. Portfolio Shield, a new webinar on Tackle Trading that I'm going to do for the first time on May 1st. And so if you want to come join one, join both. We love it all. So all you got to do is hit the link in the description below, go to our live events page, and register for either Cash Flow Synergy, Portfolio Shield, or both. And as always, if you are not a member of the amazing Tackle Trading Pro community, definitely sign up for a free trial. Test out all those goodies we do in the pro community, such as the Traders Lounge, the Pre-Traders Lounge on Discord, the newsletter, the Traders Report, Cash Flow Club, coaches shows, masterminds, coaching, you name it. We do it all at Tackle Trading as we put the we put the education in application.
The education in the application, brother.
I about put application in front of education. I'm sorry. With that said, everybody have a wonderful, wonderful rest of your week. And if you need anything from Tackle Trading, our sponsor of the Trading Justice podcast, hit us up at team@tackletrading.com. Hit us up in our Discord channel. And everybody, have a wonderful day.
Have a great day, everyone.